Growth stock investing. Should we invest into growth stocks? This is the time to find out here at Barry Charles YouTube. Today we're going to look at growth investing. Is this where we can make big money in stock investing? Wow. First of all, what is growth investing? It's looking for a company that is growing its product or service for the long term and more importantly immediate next couple of years in the short term for quick growth for an investor. Now we have seen this with Tesla as one big company that's really just skyrocketed out, and there is other companies out there that I think are going to be very interesting times coming ahead in terms of growth investors out there that are very low prices at the moment considering where they can be if they get to profitability. So growth investing, what is an investment into a company that is growing growth? Now there's all different ways of looking at what in terms of growth, but it's looking basically at growing your net income and revenue. Now, can you smash your revenue 30% every year or more? This is like super high growth company. You can even be higher than that, but that just gives you an example of where high growth companies are. Then you can have other companies that are like 10% and a bit more steady. Every year they're growing about 10% and they're good stocks, but they're not super high growth. But obviously the risk and reward here on growth stocks is that most of them are losing money initially because they just keep reinvesting all their money into the business to ramp up scale. And obviously, as you're seeing with Tesla, once companies get to profitability, they can really skyrocket from there in terms of stock price. What companies should we be looking at as a growth investor? Well, I'm going to put it out there. It's not financial advice, but I think Palantir is an absolute steal deal for an investor in a growth investing company because I believe this company is going to profitability. They have already a good market share in the spaces that they are aiming for, as well as they are looking into more new ventures and are getting more involved in finding new ventures to gain profitability. Now, Palantir's issues have been around cost, and they've got to get their costs down to get to profitability because they're dealing with high tech machines and software. So it's something that Palantir has struggled with so far to really nail it, but they were going alright, but then the Rona sort of come in and slowed everything down. It looked like they were getting closer and closer to profitability, but then they're gone. But they keep smashing revenue, and even with the issues they're having, they keep smashing revenue. Now obviously you've got to get the profit to go with the revenue, but I believe in a couple of years' time you're going to see profitability with Palantir. Not financial advice, but this is a stock that you're looking at scale. So you're looking at companies that can scale their business. Amazon is still scaling their business. How much more scale they've got, there's a big question mark, but they have still been scaling their business the last 5 years big time, and they really have jumped up their revenue. So their company, Tesla, is the same. There's heaps of stocks out there. Apple's still a growth company. It might not be super big compared to some there, in terms of growth, but they're still growing, so they're not going backwards. But it's looking for the next one, really. Got to do your deep analysis on what stocks are coming up that are just dwindling away at the moment, and they're going to go boom to the moon. But also there's a danger with growth stocks, as everyone has seen with how the crash has happened. Growth stocks have been hurt the worst. And why is that? Because of profitability. And profitability in companies, risky plays, because they can't afford to keep the business going if it keeps going worse and worse, which is obviously the issue that people have investing into stocks in the growth stock region. What can you do to safeguard yourself? That is the question you need to. Is this company still profitable? Why is it dropping? Because if it's just dropping because everyone else is running scared, nothing's actually changed in the business model, and they're not actually losing much more money. It's just because of what's happening out there. It could be a good time to load the boat on these companies if you're invested in them and still believe in them long term. It's a good time to buy. Okay, so obviously growth stocks have been risky after being very good for a long time, but they now at the moment are risky propositions. But this is when it's not need to get scared. It's time to get smart and find the right opportunities out there. Now the question is, do you sell? I have sold a bit and refinanced into different not refinance, but gone into different sort of companies that I see more opportunity in. And I obviously still have kept a few of my stocks as well that I've really liked. And but it's about having capital. That's the biggest thing I can tell anyone always have capital available, always, no matter what time. Obviously right now you want to have as much capital as in, because you want to get as much into the stock market while it's down. Personally, I like to see it down for a couple of years, maybe even longer, so we can just keep putting more and more money at cheap prices, and then boom, when it goes up, we get our portfolio doubles, triples. That's the sort of investing you'll be looking at here in growth investing. You're trying to find those stocks that are, say, $10 stocks now, they turn into $100 stocks, $200 stocks. Now, what I was going to say before, but I got a bit sidetracked, Zoom is a prime example of a growth company gone wrong. But are they wrong? Or are they just wrong right now? This company skyrocketed from $60, and even I was looking at investing in 90, 120. I missed the boat. It went up to $500, and now it's crashed below that now. Zoom Technology. So what is happening in the growth stock industry? Obviously, Zoom hasn't disappeared, but because the Rona is dying down, everyone's thinking that it's lost its popularity, which it would have had a little bit of popularity. It depends how it goes. Will it go back up again? That is the question you have to, when you're looking at any growth stock. But to me, when I look for a growth stock, there's a few key pointers you need to look at. You've got to look at the management of the company. That's a key one. Have they got the right people in charge, the CEO, the people marketing? Have they got the right people involved here, down at the grassroots level as well, and making this product and whatever it is? That's one thing, management. Revenue, is that continuing to grow? Are they improving their net profit? Or if they got a loss, are they decreasing that? Is the share outstanding going down? Because you don't want to be diluted. They're a big part. And obviously the business, at the end of the day, it's a business that can scale. That's what you're looking for. A business that's only just started, but has the opportunity of a lifetime to scale. Those are the companies that make the big money. They can also lose it all. We've seen it all long before, can lose it all. But they are the company with the most potential to go to the moon. And with a growth investment, that is what a lot of people are looking for in the high risk side. Or you could stick to a company like an Apple or Amazon that are a bit less risky. But you can get risk at buying the price too high. So they have dropped a bit. But Apple hasn't really dropped super low. If Apple went to $100, then you're really going, oh, this is bargain sort of territory. But Apple hasn't gone down as much as all the other companies. So Apple is still holding the fort there. It's down about $20, but it's a lot better than the other companies. But yes, growth investing. Should you invest in growth investing? I personally think you should. I think there's a lot of options out there for you. There's shorting stocks. You can follow the technical analysis. There's a lot of things. Day trading. There's all these different. I wouldn't recommend day trading, but it's obviously an option for you. But yeah, growth stocks definitely something on your list. I think the most potential to make money long term, but also the most chance of losing a lot of money as well. Outside of day trading, just day trading you can lose a lot very quickly. So I stay away from day trading, but some people, if you got the right temperament and don't take a loss, like if you have a loss, you don't want to go, oh shit, I need to do it again. Skip. You want to double your money, you really want to deliver on what you're wanting. So growth stocks for me, I think you've got to have a part of your portfolio, whether it's the be all and end all, not necessarily, but I think it's got to be at least 25% of your income. I mean, in terms of your investing in the stock market or crypto, I think you're going to have about 25% growth, because that's where a lot of your big money's going to come from. You can go a lot higher if you want to be higher risk, but yes, growth investing could be for you. I make all these videos for education and entertainment purposes only. This is not financial advice. I hope you've enjoyed the video on growth stock and learned a lot today. Thank you very much for coming, and I'll see you at the next video.